Our next guest has just returned from the Copper Club in New York, where Fast Markets hosted its annual industry event. She was a featured panelist in the opening session titled The Copper Outlook, Setting the Scene. That conversation took place just weeks before a major development. On Tuesday, President Trump signaled that copper tariffs could be raised to 50%, higher than anticipated and possibly implemented sooner than expected. In this interview, we'll revisit some of the key insights shared during the panel and explore how the outlook for copper may be shifting in real time. I'm Johanna Bota, and with us today is StoneX's Senior Metals Analyst, Market Analysis, EMEA and Asia, Natalie Scott-Gray. Welcome, Natalie. Nice to have you back.
Pleasure to be here.
So let's start with a little bit of context, shall we? Can you walk us through what has happened with copper since the introduction of Section 232 up until now?
Of course. Well, a lot, I would say. I mean, the background that we have is that Trump signed this executive order for the investigation on US copper imports back on the 25th of February. Now, in theory, we had 270 days for this investigation to run, which would have taken us into November. And if deemed from the investigation that US imports were a national threat to security, then the US administration can implement those tariffs almost immediately or within 15 days. So what we've seen over the last 4.5 months is really market players trying to guess what the outcome of this investigation is going to be. Will tariffs come in? If they do, when? What level will they come in? Will there be country exemptions? And will there be exemptions to the type of copper products that are going to face tariffs? So looking to what we've seen in the copper market, I mean, firstly, copper COMEX prices have been heavily underpinned and hit record highs so far this year. We've had a high US premium that's attracted a significant amount of material into the US. So from the beginning of the year, really to the beginning of June, we've seen about 500,000 tons enter the country. Now, this material has entered the US because of rerouting, so coming from major producing countries and key trading partners like Chile and Canada, but also from these markets of last resort like the LME and the Shanghai Future Exchange. So the longer that we've had this uncertainty as the year has played on, the more tightness we've had in the availability of copper outside of the US. Now, as a result of this, we've seen inventories on these markets of last resort, like the LME and the Shanghai Future Exchange, drop to their lowest level for this time of the year since 2023. Now, looking at LME copper prices specifically, this extreme draw out of units has pushed, really since April, the time spreads into a backwardation and a sustained backwardation from April just up until we had this announcement on Tuesday. So if we look at the forecast for LME copper prices before this announcement, really, the markets were expecting we were going to have sustained backwardations. Copper was tracking towards that $10,000 per ton level, and the view was that it was going to stay at these levels until we knew more about the investigation. And of course, Tuesday, we finally and unexpectedly did find out more. So we're now looking forward.
Where are we now?
Exactly. Well, based on Trump's comments, which I think is all that we can really take to forecast this, is that copper tariffs are going to come in at 50%, so higher than what the market was expecting, which has been going back and forth between the 10 and 25% tariffs. We now have heard from Trump on the day later, so on Wednesday, that the tariffs are going to be enacted on the 1st of August. So this is much sooner than I think the markets were expecting. The time frame here has been a guess. So, you know, people thought initially when we had the reciprocal tariffs, maybe we would hear about copper on the 2nd of April. Expectations then went to maybe sometime around June. And then we're looking actually maybe it'll take the whole investigation period. It'll come in November. So the fact that they're now coming in the 1st of August did catch the market off guard. But there are still a lot of uncertainties. So we do not know if the tariffs will have country exemptions for big producers like Chile. And we also don't know what types of copper are going to be covered as well.
So what impact has this had on the market? How has it been? How has it been and what's the week ahead looking like?
So, I mean, the initial reaction, unsurprisingly, is copper COMEX prices had a record one-day spike, obviously to the upside, hitting an all-time record high. Meanwhile, LME copper prices are on track to record their sharpest weekly fall this week since early April. So what that's done to the spread between copper and LME prices is that it has shot up to over $2,700 per ton in the aftermath, which again is a record high. But what I would say is noteworthy is that the tariff is not pricing in the full percent. So the spread is not pricing in the 50% tariff. We're more like 28%, and that's quite interesting.
That is very interesting. So why isn't the market pricing in the 50% tariffs?
It's probably a multitude of factors. I mean, when you look at the level of inventory that's in the US, it is very elevated. If we put this against the fact that demand is set to be pretty moderate in the US, especially if we have higher copper prices, we are also of the view that over the next couple of weeks, we've got to the 1st of April, theoretically, so that's what we think. We do expect a lot of material to enter the US, even over this short time period, but through maybe different mechanisms than what we normally see. So there is some anecdotal evidence that market players have been holding copper on ships outside of ports, waiting for the opportunity for the premium to jump. We also expect that big trading partners like Asia or South America are going to try and get material into the US any way they can. So there could be a bit of rerouting here. So Asia might deliver material into ports in Hawaii rather than New Orleans, because that takes 10 days from Asia to Hawaii rather than a month to go to New Orleans, which is the normal route we see. And also South American producers might put material actually into Puerto Rico, which is a US customs territory, rather than putting it into the mainland, because they want to do it before the deadline. We do not know if Trump will give exemptions for material that is, you know, already on the water or going to the US. So there's uncertainty with that. So everybody's rushing to get material, and that's another reason. And then finally, what I would say is because of the uncertainty with country exemptions, that's another chain of thought that I think is limiting the fact that the spread isn't going up to that 50%. Because if a major producer like Chile can put material into the US, it really alters the outlook here, because there will be material being able to go into the country rather than a complete kind of, you know, stop with 50% tariffs if indeed it's put on all trading partners.
Okay, well then looking ahead, if the tariffs do come into play, what do you foresee for copper trade flows?
So of course we don't know exactly what the
Here's a magic 8 ball.
Yes,
Tell us.
exactly is going to be. But how we'd model it is, if tariffs come in sooner rather than later, the sharper the reversal to more normal trading patterns. So I mean material not just going into the US or being drawn into there. We'll see it reverting back, going to particularly Asia. We see the same situation if tariffs do come in at the 50% rather than 25%, because it makes it much more expensive to put material into the US, so it's less attractive. So again, a quicker reversal. And if there are no country exemptions, again, we would expect that faster reversal back to more normal trading flows.
I see. So Natalie, one last question. What does this mean for future copper prices?
Well, in a scenario that these tariffs do come on at this higher level, they come in sooner than the market was expecting, and let's say there aren't country exemptions, then we do see this as bearish for LME copper prices. While US copper COMEX prices will remain elevated, they may come under a little bit of pressure initially because the amount of material coming in, but ultimately in the near to medium term, the US does still have this 44% reliance on copper imports, so those supply risks will be seen in domestic copper prices in the US. Now, just looking at LME copper prices, the notable shift we've had in the time spreads, moving from that sustained and record level of backwardations from April up until the announcement, we've now seen these time spreads move into a contango market. So we do see the impact here as possibly the nail in the coffin for these backwardations that we've had. And with that in mind, we expect that copper prices over the next couple of months will start to track back towards this $9,000 per ton level. Now, having said that, we do need to be cautious that the tariffs may have exemptions, and also we do have this extreme tightness outside of the US, so it will take time for that to ease, potentially holding those copper prices at slightly higher levels than they should be, given the news, just on the reality of how stock flows will come back into the market. But I think the major takeaway is that we see tariffs resulting in LME copper returning back to Dr. Copper and those characteristics where copper reflects the health of the global industrial markets, because LME copper prices over the last certainly month and a half have not been. They've only been reflective of the risks with this investigation. So tariffs coming back or coming on for copper, we think that Dr. Copper will return to the market.
Natalie, thank you so much as always for your insight, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.